Welcome to Financial Insights for Small Business Owners, the podcast that brings clarity, strategy, and real-world financial guidance to entrepreneurs and non-profit leaders. Hosted by Raphael from Key Forecasts, each episode delivers practical tips and expert insight to help you grow your business with confidence. For more resources or to schedule a consultation, visit us at keyforecasts.com.
Hey everyone, welcome back to another episode of Financial Insights for Business Owners, where we cut through the noise and get into what really matters when you're running a business. I'm Raphael, your host, financial controller, CEO, entrepreneur, and someone who's seen what happens when a business focuses too much on sales or profit and not enough on cash.
And I'm Alexa, your co-host, here to ask the tough questions and keep things practical. Today's episode is titled, Cash Flow versus Profit, What Every Entrepreneur Needs to Know.
That's right. If you've ever looked at your income statement and thought, I'm making money, so why can't I pay my bills? This episode is for you.
Or if your client base is growing, but your stress level is too, yeah, we're going there today. Segment 1. What does cash is king really mean? Let's start at the top. Raphael, people say cash is king all the time in business circles. But what does it really mean?
It means that the only money that matters is the money you actually have access to in your bank account. Not what you build, not what you're expecting, not what your profit and loss statement says. It's the cash you can use to pay staff, keep the lights on, cover your rent, buy supplies. That's what keeps your business running.
So in a way, cash is your business's oxygen.
Exactly. A business can show a profit on paper and still go broke if it runs out of cash. I've seen it happen. Honestly, more businesses fail from lack of cash flow than from lack of profit.
Segment 2. Profit vs. cash flow. Let's dig into the confusion between profit and cash. Why is that such a trap?
Because most business owners look at their income statement, their profit and loss report, and assume that number at the bottom, the net income, is spendable cash. But it's not. Profit includes things like unpaid invoices. If a customer owes you $8,000 and hasn't paid it yet, it still counts as revenue, but it's not in your account.
So you've done the work, but the money isn't real yet.
Exactly. Until that invoice clears your account, it's just a number.
Give me an example of how that creates chaos.
Sure. An e-commerce business makes $50,000 in December, but it paid $40,000 up front for inventory in October and hasn't collected $15,000 of customer payments yet. They're technically profitable on paper, but have negative cash flow. Now it's January and they can't pay rent or buy new inventory.
Wow, that's a real issue. Segment 3. Accounts receivable, the silent killer. Let's talk about AR, accounts receivable. Why is it such a critical piece of this puzzle?
It's massive. AR is where your money hides. If you're not managing accounts receivable effectively, you're essentially giving customers an interest-free loan, and you're still expected to cover all your expenses in the meantime.
What are some red flags?
Raphael, if you have clients on net 30 or net 60 terms, and you're not following up, you're in trouble. Another one? When a business is doing great, but still using credit cards to cover payroll. That's usually because the cash isn't coming in fast enough, even though the invoices are out.
Do you recommend charging late fees?
Absolutely. Or offer a 2% discount for early payments. But you also need a system, automated reminders, invoicing software, and a culture of consistent collections.
Segment 4. Real-life small business examples. Let's put this into real life. What's a small business example where things went wrong because of poor cash flow?
One client, a small landscaping company, got several big commercial contracts. On paper, they were making more money than ever, but the contracts paid 45 to 60 days after completion. Meanwhile, they had to pay crew wages every Friday, buy fuel, maintain equipment. They came to me in a panic. Credit cards maxed, payroll due, no cash. We had to restructure everything, renegotiate payment terms, and set up a cash flow forecast to save the business.
So even growth can kill you without cash flow?
Growth is dangerous when it's not financed properly. It's It's like flying without checking the gas tank.
And what about a success story?
There's a small bakery in Orange County I work with. We set up a weekly cash forecast, added online payment options, and shortened their customer terms. They went from constantly being behind to having a 2-month cash buffer. They now take weekends off and sleep well.
Segment 5. How to fix your cash flow. Let's give our listeners some tactical advice. What are your top ways to fix cash flow problems?
Here are 5 core things every small business should do. 1. Send invoices immediately. Don't wait. As soon as the job is done, send that invoice. 2nd, review cash flow weekly. Just like checking your weight or your blood pressure, it's health data. 3. Follow up on invoices. Set reminders at 7, 14, and 30 days. Make it part of your routine. 4. Negotiate better payment terms. Push clients for net 15 or partial upfront. 5. Build a cash reserve. Aim for 1 to 2 months of operating expenses in your savings account.
And how do you recommend business owners actually track cash flow?
Use software like QuickBooks or even a spreadsheet if you're just getting started. Project 30, 60, and 90 days ahead. Know what's coming in and what's going out.
Segment 6. Emotional and mindset shift. I think a lot of business owners feel embarrassed about this stuff. Like, they should know better.
There's a lot of shame tied to finances. But let me tell you something. Cash flow issues aren't a character flaw. They're a structural flaw. You can fix them. You just need a system.
What's the biggest mindset shift you've seen?
When clients stop chasing profit and start protecting liquidity, they stop asking, "How much did I make?" and start asking, "Can I cover my next 60 days with what I have on hand?"
Segment 7. When to ask for help. At what point should a small business owner bring in help?
The moment you feel uncertain about cash. That might mean a financial coach, a part-time controller, or even just booking a one-time consultation. Don't wait until you're behind on payroll.
And a plug for you. You do offer that help through Key Forecasts, right?
I do. We help small business owners set up cash flow forecasts, manage AR, and understand their numbers. No jargon, just clear strategy.
Segment 8. Rapid fire questions.
Alexa,
Let's do some rapid fire, short answers only. Best time to invoice a client?
immediately after service or delivery.
Biggest cash flow mistake?
Assuming profit means liquidity.
How much cash reserve should a small business have?
Minimum 1 month of operating expenses, ideally 2,
Thoughts on loans to cover cash shortfalls?
only as a bridge, never as a habit.
Most overlooked expense that kills cash?
Subscriptions and underpriced labor.
Wrap up? Raphael, this was packed with gold. If you're a business owner listening and you've ever felt like your bank account doesn't match your success, now you know why.
Absolutely. Your business isn't failing because you're not profitable. It's suffering because your cash isn't showing up when you need it. Fix the cash flow and everything changes.
And if you want help getting there, visit Raphael's site, keyforecast.com, or schedule a consultation.
Let's turn confusion into clarity and fear into strategy.
Thanks for listening to Small Business Real Talk. Subscribe, share, and leave us a review if this helped you.
Until next time, stay liquid, stay smart, and stay in business.
Thanks for listening to Financial Insights for Small Business Owners. For more tips and tools, visit keyforecasts.com and don't forget to subscribe and share.